Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, and we get to meet the fintechs that are bringing them new digital innovations. On this episode, I'm speaking to Aaron Letzeiser, the founder of Obie and partner at the Pioneer Fund. So if you're ready, let's suit up and get out on the field. Aaron, it is very nice to meet you. Thank you for coming on our podcast. Why don't we start by having you share a little bit about your background and your journey to founding Obie?
Yeah, well, Kris, thanks for having me. It's great to be on the pod today. My journey into Obie, it's weird. So Obie's we're an insurance technology company. I never thought I'd be at least professionally in the insurance space, but I think that's for a lot of fintech founders and really just startup founders in general. They fall into solving a lot of the problems that they had on a day-to-day basis. So the real quick version, I started the company with my brother Ryan. His background was real estate, private equity. I've been the tinkerer and the entrepreneur since I was really young. I always liked working for myself. Started and founded a couple of different ventures, and Ryan came to me one day, my brother, and said, "Man, like insurance is such a pain in the ass. Like it's one of my largest line item expenses, but it's like the one I had the least amount of control and insight into. And every time I need something, it takes like 7 or 10 days to like finally get it. And I'm in an Excel spreadsheet, and any of your listeners that have pitched will appreciate this. Our first pitch, totally naive. Obie was on a napkin, totally not ready to go out and raise money. We stopped at an Office Max and we picked up a fax machine, and we literally brought the fax machine to the office just to like slam it down on the table and be like, this is how people operate in this space. Right. And to this day, it's still, the guy didn't end up investing. Though I think now in retrospect, he probably could have gotten them in, but he is still, I don't know, 5, 6, 7 years later at this point, always remembered that moment of like the two guys that thought they were in tech showed up in suits and ties, right? Also the key giveaway, and came in with the fax machine and threw it on the table. So, that was the original journey. We started, we bootstrapped it ourselves, irresponsibly put a lot of our own cash, right, into the dream. Probably should have died several different times, and finally found that like really good product market fit. Started to really listen to our customers, as surprising as that is, and started building what the people wanted.
So you mentioned it's in the insurance business, but specifically, what does Obie do? What kind of insurance does it provide?
Yeah, so we're an insurance technology company that's solely focused on the residential real estate investors. So there's 17 million of them, as opposed to what the New York, front page of the New York Times might say. Wall Street does not own your home, right? It's primarily the 17 million small mom and pop real estate investors. They got 1 or 2 properties, right? Maybe they're an accidental landlord. Those are the folks that we service, and those are the folks where we just felt like the market was either really focused on that home and auto products, right? Like everybody you see in the Super Bowl commercials, you're going to see coming up soon. And then, all your really, really big commercial operators. And then you had this whole segment of the population, a lot of the baby boomers and their kids now that are grabbing these assets, and other folks looking to invest, that just, they didn't really have a good place to go. And as a result, the carriers take their sweet time, right? You're not my home and auto bundle. I'll kind of get to you, Kris, when I get to you. And so we really wanted to flip that on its head. So at Obie, you can rate, quote, bind, issue, pay all instantly. We've had people go through our flow in as little as 90 seconds.
Wow.
As not as surprising as this should be, but with insurance it is. We just use publicly available data to pull in what year your house was built, as opposed to asking you, right? That's not a novel concept, and it shouldn't be, but it still is. So we try and make that experience a little bit nicer, put the owner in the driver's seat to really make that decision for themselves. They want a high deductible, low deductible. They want a lot of coverage, a little coverage, right? They dynamically see that price change, and then they feel really good about the insurance that they're actually purchasing.
So you decided to go directly to the consumer versus to the businesses and institutions or the insurance companies that were underwriting the actual policies themselves.
Yeah. So we, our journey into this, we went out to a lot of those carriers. We wanted to become kind of a carrier ourselves, right? Or a program administrator. We we wanted to build this ourselves. And, all these carriers were like, well, how much premium you guys doing? And we're like, I don't know, $20,000, right? We got like 20 homes on the platform. We're doing great. We needed a little bit more, right? Our naivety was showing through. So we started as a digital insurance agency that was really just a pretty
Mm-hmm.
looking form on a website with some nice HTML and CSS that came to my inbox. And, the differentiator is that I was sitting there on the other end of that form and typing everybody's information and really, really quickly, and then shipping that quote back off to somebody, right? So it wasn't instant, but it was like 3 to 5 minutes. I could get something back to somebody. That's how it started.
That's a true MVP. That is a true MVP right there.
Oh, without a doubt, right? And the nice thing about that though, Kris, is I got to experience on an extreme level what products were available on the market, right? Because I was trying to quote those for everybody else, because the reinsurance market, the people that basically give you insurance capacity to build an insurance company, they're like, hey, how much premium you guys doing? What's your loss ratio? You're writing good business? Is this actually taking off? What's your growth rate, right? They're just as intense as kind of the VC funds that are out there. And so we were just trying to drive as much premium into, all the household names that everybody's heard of, right? Your Allstates, Travelers, and Progressives, and anybody that we could try and write this business with to give our customers a really good experience. And eventually, we finally got to that point where we convinced some folks inside the insurance industry to take a chance on us. And that's really where I think things started to change for Obie. Really got us to a point of starting to see our dream come alive and find that product market fit.
That's excellent. That's excellent. So how, that was 5 years ago, you said?
Yeah, that would have been
pre-COVID.
Summer of 2019.
Summer of 2019.
We were pounding the pavement trying to raise, just a measly $750,000, $1 million, early January of 2019. We were in the Midwest, so kind of the VC desert. We were post-product, post-revenue. I like to tell people it's post-revenue, but it was like 10 grand, right? I'll take it. It was 10 grand more than I've had for the year prior.
That's right.
And so we tried to pitch unsuccessfully for a while. Finally threw in our fourth application to Y Combinator. It was what we call our F it application. That's literally what Ryan and I called it. We didn't spend any time on it. We went through, we gave one sentence responses. We submitted the thing and totally forgot about it. And I don't know, 4 or 6 weeks later, we got invited out to an interview, and that really, I think, really changed the trajectory of the company. Moved out to San Francisco, started to build that network and really build the company.
Talk a little bit about that experience, because you're the first fintech I've talked to who's gone through Y Combinator. Talk a little bit about what that experience is like and what the value is for the entrepreneurs and the founders who go through it.
There's value. There's definitely value, hands down, for anybody, regardless of where you're at or the type of startup that you're trying to build. I think YC takes a lot of chances on people, right? People in big markets, right? Those are the two biggest pieces. But I think for Ryan and I specifically, we were state school kids in the Midwest, right? We had no venture network. People always say, hey, don't just email the VC fund, find a warm intro. And I'm like, I don't know anybody who knows these people, right?
Right.
And you pound the pavement to do it. So I think YC gave us really the opportunity to really build that network out there, right? That badge of approval. And it was intense. So YC, for your listeners, it's called Y Combinator. It's been around for probably about 15 years, maybe a little bit longer. And the likes of Airbnb and Stripe and Instacart and some of the biggest names really in tech have come out of that program. And it's a 3-month intensive program where it's different than a lot of the other accelerator programs that exist out there. You spend your time really doing 2 things primarily. 1 is building your startup, and 2 is talking to your customers. And that's it. I mean, YC's motto is make something people want, and they pound that into you for 3 straight months. And you're really only with those partners for, an hour, 2 hours, 3 hours a week, right? Just running through some of the challenges that you might have, as well as your other folks in your small cohort. And within that cohort, there's an expectation that you meet together. There's probably 5, 6 companies. So probably about 12, 15 people in a room sitting around a table. And the two big questions that you have as you start every single week is what's your one metric, right? And what's your one-liner? Those are the two biggest things we focused on, right? And everybody had to get through that before we got into maybe some other challenges people were running into. And so
Right.
Ryan and I was like, hey, how much premium did we sell that week? And what's our one-liner? And you kept repeating it over and over and over again. So the one-liner became, muscle memory, right? And you heard people that knew nothing about your business that needed to be able to regurgitate back to you at a kindergarten level what it is that you do, right?
Right.
And then with the metric, there was really great peer pressure, right? Not that people were super competitive. I would say just the opposite. But you didn't want to show up that day and be like, wow, damn, I didn't sell a thing this week and everybody else did great. I'm just going to like kind of cower in the corner here and like maybe people don't pay attention. So,
Yeah.
that was the biggest thing. And I think as we got to the end, that network and the challenge it was to even get accepted to the program, that's what opened the door to that, to that network for us. And we wouldn't be here today without it. I think it's certainly possible for those folks that move to one of the coasts and start to network and get to know those people and like build that network organically and really throw themselves into it. Ryan and I were not one of those people. I had just gotten married the year prior. Ryan had gotten married 3 months before we got into YC and moved to San Francisco. His poor wife.
Wow.
That was our experience. That was the dedication to it, and it was a really fantastic experience.
You're also a venture partner at the Pioneer Fund. Does it inform how you make investments? Your experience with Y Combinator?
I think it does. So many of the lessons that they pounded into us, one, were good from like a fundraising perspective. They knew what VCs would want, but when you really step back from that, one of the things I don't think I appreciated when, I was a young founder trying to find any VC that would talk to me, right? Reaching out to every analyst or every associate, is the things that they're looking for really do reflect the health of the business, right? And directionally, even if you haven't made revenue yet, even if you haven't figured out exactly what your business is going to be, asking those questions, not being afraid to actually sit down and ask a venture capitalist or ask an associate at a VC fund or whatever it might be, what are the types of metrics you look for in my business, right? They're looking for a return. And as much as there's always a love-hate relationship between, you and your investors potentially, it's one of those things where like they can tell you actually what's worked. That's all they do all day long. And most people want to be supportive. And so, I think it very much has both YC and just being a founder, going through a couple of rounds of financing at this point. It really has informed, my founder empathy, recognizing the things that I didn't know about when I was getting started. And how can I be helpful like in that way? What are the quick responses that I can provide? What are the things that I do? And then beyond that, there's such a value in having investors that have been founders themselves, right? At my first board meeting, I was scared out of my mind, right? I didn't know what to do. I didn't know if I had grown enough, right? I didn't know how to pitch. I didn't know how to do all these things. And I'm like, listen, this is the stuff to focus on, right? These are the people that are looking to help you out. This is the way to structure that. I know what people have gone through. Just like I told you, right? Our seed round, we were still using that pretty looking form with me basically on the other end of it, like typing away into my computer, right? And I sold this idea, not in a like a nefarious way, but like I sold a faster, better experience in a really big market to these investors. And I told them where my vision was going with it. And I was using their cash to make that a reality. And so, I've learned to try and like help those that are pitching as well as like those that have taken capital from Pioneer or anywhere else, to be comfortable with, knowing what you know, knowing what you don't know, and recognizing what that founder journey is like, that I think is difficult for anybody who hasn't been in that position to be able to do.
Right. Yeah. It seems like just 18, 24 months ago, the world changed, right? From a VC perspective.
Oh, absolutely.
Yeah. How has that affected your business and the businesses you invest in?
Yeah. I mean, I would say we never set off with Obie to be a remote, or even hybrid remote company. At the end of the day, I loved being in person. I think, as an early stage company, as a startup company, there's so much value in standing around that whiteboard and really getting that time. And so that's something that came to a screeching halt, right? We signed our first lease ever in November of 2019, right? We got a good 4 months out of that space, a beautiful 4 months in front of that whiteboard. And then the world changed, right? And I think as a business owner, regardless of the stage that you're in, it's about figuring out how do you effectively work with people through a screen or through a Slack huddle or through Teams or whatever that might be. And so that's been the biggest piece is how can you create the right expectations? How can you build the right infrastructure in your teams? We do no meeting Wednesdays. And that's something that people have implemented in the past, even when they're in person, but it's more about how can we keep our heads down and limit the number of notifications that we're getting, limit the number of people that say, hey, can I jump on a quick huddle with you? Right. All of those things. And we had a bunch of people in Chicago this week on different teams who don't live and work here. It's so easy to just say, hey, Kris, can you come look at this really quick? Right. Can I get a really quick answer? Otherwise, I'm slacking you, right? And I can be like, hey, Kris, do you have a second for a huddle? Let me send this over to you. And 4, 5, 6, 7 hours later, right? Somebody finally gets back to you, or it's Friday. Maybe, you get the, hey, sorry, I didn't see this on Friday, right? And so the blocking is a real, the real thing. People get blocked in the stuff that they're doing, and how do you work through that? And that's being intentional about that. It's probably been one of the biggest things that we've had to work through, being effectively a hybrid remote company.
What do you think AI? I mean, everybody talks about AI these days, right? And I'm even hesitant to bring it up this early, right? But I'm interested in a world where you're helping your customers find the right carrier, right, that they need. What are your plans to use artificial intelligence, or do you have plans? Or are you still entering a smart form on the back end, Aaron?
No more smart forms, Kris. No more smart forms. I don't have the time for that. My team doesn't like it when I quote anymore. They tell me I should have better things to do with my time. So yeah, I mean, it's going to be really, I think, revolutionary for the insurance market, which I say revolutionary, but we need to take that with a grain of salt. The insurance market as it is still a good 5 to 10 years, even behind your traditional fintech, right? It is still lagging despite the trillions and trillions of dollars in overall market value that insurance commands. So we do a couple of things. We have we utilize some AI internally already. One of the biggest ways and reasons for that is that, we utilize a lot of raw data that comes in order to be able to better underwrite the properties that we see, right? So you can use a lot of these learning models to actually take a look at somebody's roof, right? To take a look at somebody's property on Zillow or
That's
on
amazing.
HotPads or whatever it might be. Right. So just basic stuff that the engineers are really enjoying playing around with. That's one of the benefits of running a hackathon or getting the engineers out of a day-to-day, and they get to play with a lot of the new technology. So we've started to try and implement that and just play around with it a little bit. But I think, both in our industry and just in general, the ability for something to be able to quickly read, I mean, insurance docs, right? Most people have some type of insurance policy, auto, home. Nobody's ever read it. I haven't read mine, right? I hate my auto and home renewal. I hate going through that process. I have to do it in March, and I'm in this space. I'm not reading all 100 pages. That's where I think, being able to do comparative documents and being able to feed docs into, an engine that can review that for you or help you through a claim or see if something might be covered or not covered. That's the really interesting piece for insurance right out of the gate, is how can you start to better educate your customer? How can I start to, compare policies, right? Everybody always wants the comparison tool. Well, they're always well, here's how much car insurance you have over here, and here's your limit over here, right? And nobody's actually looking that page 49 completely excludes half the stuff that you actually potentially want covered. And so I think that's going to be the interesting stuff for insurance agents going forward. Is one of those easy first step, dip your toes in the water. Let me throw in 2 docs, right? And let's compare what they actually do. Or I have a claim. I can describe what happened. Where in the document might it tell me a little bit more about whether or not that's going to be covered or what my process looks like? So those are the first things. I think long term, from an underwriting perspective, from a data perspective, I think it's going to have like a massive impact on the fintech market as a whole, but in the insurance space, just to be able to start better pricing, a lot of this stuff. So much of what insurance does is cookie cutter, and that's just because
Hmm.
data is so fragmented. But if I can give you a personalized auto insurance quote based on your behavior, the way that you actually operate, the way you drive your car, right? Or the way, you operate or update your house, right? You should be
Hmm.
a good driver, a good owner, a good landlord in our space should be, they should be rewarded with better rates because of the way that they actually take care of a lot of their stuff. And
Right.
alternatively is also equally as important. Maybe I don't want to cover somebody that might be a little bit more, might be a little bit of more of a risk, right? Or buying a
Right.
property that's just a little bit older. So those are, I think, are going to be the fun things down the line.
So as you look at opportunities like that, how do you make decisions about which of those you're going to pursue and at what kind of pace and investment? Right? Because I think one of the things that I see startups sometimes do is they're so focused on first obviously trying to get to MVP, but then they end up like just taking request after request after request for changes or features or functions to sign the next client, right?
Yep.
So obviously you're a more established company than that. How do you make decisions about where you put your investment dollars to improve your products and services?
Yeah, I mean, first, we were there, right? Like we
Hmm.
even if you're just getting started, like Ryan and I would sit there and it was feature fatigue, right? You'd go out, you get a really great demo, and you'd feel really good about it because the person's like, "I love what you're doing. Please build me this,"
Right.
right? And then you're like, "All right, I'm gonna go." Chris just told me that he needs a message board on my app now, or I need a portal, I need whatever, and I go and I build it. And then you go give somebody else the demo, and they're like, I really love that, can you build me this? And then you go back and you're like punching into your ID and you're coding
Hmm.
everything out. It's fatigue, right? And you end up a mile wide and an inch deep, and then nobody's actually bought the product, right? um,
Hmm.
I would say we do a couple of things, and it's easily as applicable regardless of the stage that you're in. The first is, like, I think always going back to those YC roots, right? Which is, I think really good, really well aged wisdom, which is like, make something people want, right? Talk to your customers, listen to your customers. But there's a caveat in that, right? The caveat is listen to your customers and then ask questions, right? I think
Hmm.
that's the thing that people are always worried about. They're worried about pushing somebody potentially into saying, well, I wouldn't really pay for that, right? Or I wouldn't
Right.
really do that. Anybody, and I have found this to be true even at our stage, when we're asking customers about potential features to build, and that's really always been our guiding principle, it's how big
Hmm.
of a problem is this, right?
Hmm.
How much more would you be willing to pay for this, right? If I built this tomorrow, are you going to sign up for my new insurance SaaS subscription, right?
Right.
That's your thing, right? When you hear somebody that says, "Wow, I'd be willing to pay $20 a month for that. I'd be willing to pay $50 a month for that," right? And if you say, "Listen, I'm going to go home. That's really easy to build. If I come back to you tomorrow, like you're going to sign up, right?" And if they're like, "Hell yeah, take my credit card," somebody else feels the exact same way, right?
Right.
And if you've heard that feedback and you know that these people are gonna do that, and you've had those follow up questions as well, that's really good indication that like somebody's willing to speak with their wallet, right? When
Hmm.
you go back to them and you're like, "Hey, I'm gonna build this for you. How much should we pay for it?" "Oh, I'd pay at least $100 a month." "Okay, tomorrow I'm gonna have this for you. Are you gonna pay the $100?" "Well, maybe not."
This and
Right?
that.
Yeah, I'd have to talk to somebody. That's not a
Right.
big enough problem, right?
Right.
When somebody's like, "Hell yeah, take my money, Chris, take it,"
Right.
right? Like that's really where you want to go. And we're not as blunt with people anymore, but we try and aggregate that data. We try and understand what that customer feedback is. We try and utilize similar questions and similar demos to see if we're teasing out the exact same type of feedback for other people. And as we start to get a lot of that similar feedback, then you look at it, and we do what's known as t-shirt sizing internally, right? We're looking at that. We're
Hmm.
looking at what's already in pipeline, and we're going to say, all right, where can we get the most ROI? Right? For the
Hmm.
least amount of work. Is there somewhere in a sprint where like we can add this in? It's fairly easy. This is not a big item. And it can have an outsized return for us. Or did we get a lot of feedback about something that like we actually need to do some product discovery on, right? We need to sit down and actually run through that. That's always the biggest, piece of advice that I can provide, right? Write out requirements. write out why
Hmm.
this actually makes sense. Jeff Bezos is famous at Amazon, or was, for not allowing like PowerPoints and
Right.
presentations in that way. He would require you to actually write up a memo, and then everybody had to read the 10-minute memo before the meeting started to make sure everybody actually read it. If you can articulate your thoughts in that way, if you can structure them as like, this is the problem, this is the market size, this is the ROI that we're going to have from this, these are the people that are interested. Based on that, here are the contingencies. If none of these people decide to sign up, is it still worth it for us? This is the go-to-market plan. If you can articulate all of that out, then like it is worth it to build. But don't
Right.
make the Aaron and Ryan mistake of coming home from 300 different demos and like building every single feature that somebody wants. That's not what we should have done, right? We should have actually threaded that a little bit and said, what are the 5 features all of you just talked about with us? And of those
Hmm.
5, like which ones would you give me your credit card on tomorrow? Right?
Right.
We had a really good, actually the guy that I slammed the fax machine down on the table to, we had a really good VC here in Chicago, tell Ryan and I early on, do one thing and do it well. That's how you start to scale something in the startup world, right? That's how you start to scale your fintech and your technology company. Do one thing, figure out that one thing that somebody's willing to pay for you on. Make sure it's in a big market, and then start to build features from there. If you can build one thing and somebody's willing to pay for you for it, then they're going to be willing to consider what that next feature is, and if it's worth it to then upgrade or add on that feature.
Right. In a similar vein, how do you decide when to add people? Right, because
Ooh.
I think it's a common problem for fintechs, and sometimes they get out over their skis, right, by adding people in anticipation of new business, right?
Yeah.
How did you decide when was the right time to add people to Obie?
Yeah, I mean, we're stingy here at Obie.
Hmm.
That's why I'm still quoting business quietly without my team knowing. Um, it's one of those things. I mean, the first thing is obviously like make sure that you know your financial model. Make sure you know how much
Hmm.
cash you're going to have and how much runway you're going to have, especially if you raise money
Hmm.
or even if you're bootstrapping it, and you're going to continue to bootstrap or try and raise a pre-seed or a seed round. Make sure you know what that looks like, and then take your expectations and like cut them by 25%, cut them by
Mm.
30%, right? Something's going to break. Your big client's not going to come through. Something's going to happen. Can you still afford those people? Right? Are those people going to make an outsized impact on what it is that you're going to do? Are you going to be able to build and push features faster? Right? Are you going to
Right.
be able to sell to more people? The founders really at the end of the day should be selling this product. I know Obie like the back of my hand,
Hmm.
and I should be the one like out there selling this product and have been for years. Um, Beyond that, like what are those extra roles? Do you really need that? Do you need that extra engineer? Do you need that extra marketing person? Are you there yet? I think the
Hmm.
trap that sometimes a lot of founders get themselves into, either bootstrapping or they just raised a lot of money, is like, all right, I see all these other companies. I need to scale my headcount. That feels like a real company. I'm a real boss now, right? Like I'm building something here. I'm building it because I have a lot of headcount, and that's a tough spot to go down, right? You
Hmm.
want to make sure that you've got your plate full, maybe your co-founder's plate full, your first couple of employees. Like, what does the bandwidth look like, and what is not getting done as a result? What is that one individual next hire that you can make that's going to make a meaningful impact? And in a
Right.
small team, adding one to a 3-person team, adding one to a 5, adding one to a 10 or a 15-person team, that makes an impact. So make sure
Yes,
that
it
it's worth
does.
that investment, because like people will always be your biggest cost, right? And the more people you have, the more process you have to build, the more middle management eventually you have to have, the more one-on-ones you're going to be working through, the more it impacts your culture, right?
Hmm.
Nothing, I think, could be more true than being very deliberate in how and who you hire, right? Taking a little bit more time, considering if you really do want to hire your best friend or not, right? Like make sure that those are the right decisions, because you're like, that is your culture. The culture that we had at 5 people became 10 people, became 50 people, became 100 people, right? And if we didn't hire correctly, you know, that web continues to grow. And as
Right.
you become a bigger company like that, that's what's really going to make the impact. So be deliberate, right? That's the best thing that you can do. Be deliberate on the decisions that you're making, and then go back to being heads down and grinding, right? Building your product, selling your product, building your product and selling your product, right? Sales at the end of the day is a cure-all.
Mm-hmm. Sales fixes everything. We like to say that here
Yes,
at
it does.
Constellation as well. Tell me a little bit about the type of companies and or investments you're looking for as a part of the Pioneer Fund.
Yeah, so Pioneer Fund's interesting. It's a fund that was started by other YC founders, right? So
Mm,
the entire fund is actually made up of money from YC founders. Most of the venture partners and senior venture partners were all YC founders. They have varying degrees of involvement, but the nice thing is that it's a pretty large fund, and everybody in there has their own set of industry expertise, right? So the
mm,
big things that I focus on personally are really like real estate, right, prop tech, and insurance, right, insurance technology. Those two things I can provide immediate value on, and then it's primarily a seed,
okay.
pre-seed and seed organization. Invest across a multitude of different different verticals. But the nice thing that I really love about Pioneer Fund is that you have so much willing expertise that exists in there.
Mm-hmm.
There is somebody from every single vertical. Even me as a founder, right? We took money from Pioneer Fund, years and years and years ago when I was in YC. And there is somebody that is like an expert on everything. And I think going
Mm-hmm.
back to how I talked a little bit about how I viewed the types of investors, value that you can get out of that. Every single one of those people has been a founder, right? Every single one has
Mm-hmm.
been in your shoes that has been going through that journey, understood what that grind has looked like, and also understands the ROI of finding the right person with the right answer. If I've
Mm-hmm.
gotten nothing more out of other founders, regardless if they're in Pioneer Fund or else, it's not so much the things that they can do to help accelerate my business. It's the potholes that I can avoid, right? The small things that come up, the advice that comes through, the how to run your board meeting, focus on these metrics, build this type of investor update, be careful about how quickly you hire,
Mm-hmm.
hire a head of HR at this time. Don't get caught up with hiring too much in the C-suite. Be very careful about giving out titles too early on, right? Those
Mm-hmm.
easy little tiny things, and I look back at it and say, wow, yeah, maybe we shouldn't have given that person that title too early, or maybe we did the right thing here. We made sure that we built the right stair steps in the way that we've built this business. It's those common pitfalls and those potholes, right? That founders can really help you avoid, and that's what always really attracted me to Pioneer Fund.
Do they only invest in YC startups?
Not exclusively, but primarily that's just where they get a lot of their deal
Right.
flow from.
Right. Right. No, that makes sense. What are the emerging trends you're seeing in fintechs that really excite you?
I would say, I mean, obviously, I hate to use the buzzword, right? But like AI is everywhere.
Sure.
It's the next frontier. If people can figure out exactly how to harness it and to do something, I think really extraordinary with it. I think we're just getting started. So seeing what this looks like in 10 years is going to be, I think is going to be incredible. Um, there's been a really interesting time lately, obviously, like in the neobank side, especially
Mm-hmm.
with everything that happened with Silicon Valley Bank.
Yep.
I think that there is such a thirst for better user experiences on commonly used financial products online, right? Whether that's credit cards, whether it's banking, whether it's other services. Like, for the love of God, people, can we just have a nice online user experience? This isn't hard, right? I
Right.
just want to see my
Right.
transactions. I want to see my transaction history. I want to search. I want to search by the name of the vendor. I want to search by the
Mm-hmm.
amount, right? Like this is not. I want to add people, subtract people, have some permissions, wire money easily, right? It's just that's an interesting space that I want to see continue to develop. And I'm wondering, whether or not some of these players in the space, whether like a Brex or a Mercury or Ramps, some of the others,
Yep.
do they end up getting acquired by some of these really large companies, and they eventually just kind of use their front end and that user experience to better their own platform, or will these companies really give big banks a run for their money long term?
Right.
Um, that's going to be the interesting thing. I think on the other side, there's a ton of like ancillary fintech tools, whether it's identity verification, whether it's security. There's so many, I think, like interesting things that that people are doing, primarily too around, how do you keep your how do you keep your account safe, right? All the
Mm-hmm.
financial products that are out there. I've heard more and more lately around companies that are really trying to build that security infrastructure, right?
Right.
Decrease the amount of wire fraud that might happen. What are the red flags around that? We had a customer that he's a real estate investor. He was getting his roof replaced, right? And the hackers had been sitting inside their property management software, right? And just waiting for like that invoice to come in. They grabbed it really quickly. They changed, the PDF edited the routing and the account number, and somebody paid a $25,000 bill, and suddenly the roofer's coming back, right? And it's
Wow.
like it's those interesting pieces that I think technology can start to have a big impact on. I'm certainly no expert at it, but I'll give you an example. I was in a financial institution's online system the other day. It got to the two-factor, right? They don't offer the like an auth app or
Mm-hmm.
anything else, and so they gave me three options, right? They either get an email, get a text, where it gave me the area code and the first three numbers, or it could, and then like the last four were like X, 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 and X, right? But then, Kris, it gave me, I can call you, right? And the calling, I shit you not, the area code and the first three digits were X's, and the last four digits were like the available number. And so it's like, not a big thing, right? Like
And it
somebody, I'm
was the
sure they
same
could
number,
spook,
right? It was the
but it's the
same
same
number as
number, right? Like what's the point of the X, right? Like I know, people they'd have to call up Verizon and like change my number and where it's going so they can intercept the text,
right.
like all of that. But it's like, what was the point? Right?
Mm-hmm.
There's some engineer, there's some security review that happened that looked at this. They're like, yeah, we're gonna give email, text, or phone calls. But like, did nobody notice that you just gave the entire phone? Like, what was the point? Right? And so like that's where, I think if nothing else, the fintech market is going to force the broader, financial services market to level up, right? And they're
Yeah.
going to level up either by having to continue to compete with the new entrants into the space, or they're going to have to acquire these companies and ingest their knowledge and their expertise and
Yeah.
their understanding of how users want to operate. But I was just
Mm-hmm.
sitting there, Kris, and I'm like, it's ridiculous. Anybody who just logged in has my phone number now. Like, again, not that that's a big
That's
deal
right.
because you'd have to do some other things, but like, what was the security point in that?
That's right.
Oh
That's
man.
right. Yeah, I think we're going to see a lot of consolidation in fintech, right? Because there's ideas out there, and now the with the change in how kind of investment strategy, right, going from growth at all costs to you got
Oh
to be
yeah.
profitable now. Like there's certainly going to be some consolidation there. None of which is good for community banking institutions, right? Because
Yeah.
the winners are going to be the Wellses and the Bank of Americas and the rest of it, and that's what we focus on. We focus on trying to help those community institutions.
Yeah, I'm really, I am excited. I think what I've always heard, right, is like there a lot of these credit unions, a lot of these community institutions, they do have such a market hold on certain, like
Mm-hmm.
the area that they bank in, right? Like they have that
Mm-hmm.
local community relationship. And I don't think anybody really, at least maybe I'm not aware of it yet, has really targeted that segment of the market, right?
Mm-hmm.
And there are a lot of credit unions, a lot of community banks out there that, with the way that they're structured, the way that they're chartered, like they got to get rid of all their money by the end of the year, right? Like there's some that just have to like, utilize some of the cash, that the operating cash that exists there. And so there's opportunity, and I have always found from, some of the folks that I know that have done some work with credit unions, that there's a willingness to try new things, right? There's a willingness to
100%.
spend the money on something that's going to have that ROI.
Yep.
And so I am really excited to see potentially if there's if there's a community bank or a credit union type operating infrastructure
Mm-hmm.
that can break through, right, the amount of capital that would be needed to get started, but to really, I think, again, like level that playing field, right?
Mm-hmm.
Provide a unified, or a standard front end,
Mm-hmm.
that when I go to, the Wells website, or I go to Bank of America and like want to pull my hair out because I still have sadly an account there, right? If I went someplace else, I went to my local community bank, I went to
Mm-hmm.
open up something online, that's a game changer. That's a differentiator, right?
Yeah.
I still
Yeah.
have to go into the bank in order to, I've been on my dad opened up a random bank account for a side hustle he has, and I'm still on this account, right? 15 years later, something we were doing years and years ago. And I
Mm-hmm.
have to go into the branch, right? Like it is, and I just have never gotten around to it. And we opened the account with one of the large banks, and it was in Michigan. So it's tied to like that Michigan bank. And I
Mm-hmm.
even tried to call and make a virtual appointment. Well, it connected me with somebody in that branch, and he's like, "Well, you got to come in." And I'm like, "I don't live there, my man. How
Right.
do you want it?" And then I just hung up the phone. I'm like, "Screw it. I'm still stuck on this account. I still get the statement on a monthly basis." So it's
Right.
like, if somebody can start to, again, much like, what we're trying to do in the insurance space,
Yeah.
you got to try and change that user experience a little bit. And it's not brain surgery at the end of the
Right.
day. If I can give advice to like any of your listeners that are startup founders or trying to get started in the
Mm-hmm.
fintech space, like, you don't need to revolutionize the market. You just need to take one or two steps forward from where it's at today. That's it, right?
Mm-hmm.
Move the industry forward. You don't have to flip it on its head, right? And we
That's
try and
right.
pound that into everybody's mind here at Obie, because insurance is one of those things that has so many things wrong with it. Well, our customers like that stuff's instant, but they still really liked it when it was fast, right?
Mm-hmm.
What are the other things that we can do where, yeah, we could spend a lot of time and money and effort and resources into it, but if we just launch something that's just one or two steps ahead of where the market's at today, that's enough to get us started. That's enough to test the
Yes.
market.
Yeah.
That's what we've always found to be really powerful. And I think like that's broadly where, I think and hope that fintech is headed, in some place that I think, unfortunately, those are usually hard fought lessons to be learned by founders. I remember trying to take the insurance market from 0 to 100. I didn't need to do that, right? Insurance was
Right.
operating at a 10 out of 100. I just needed to get to
Right.
12. Maybe today we're at like 18 or 19, 20, right? That's all we got to do. I got to get to 25 by the end of the year. I can make it to 40 in 2 years. And I have moved this industry forward. I have moved the customer experience. That's all you've got to do at the end of the day to get started.
Yeah, I think too many founders, and to a certain degree, this happened to us. It was we tried to build max VP, right? Not the minimally viable product, because we tried to answer every question. And the
Yep.
reality is, what you're denying yourself is you're denying the iterative learning process. That is so important going through. This works, test it, doesn't work. Am I
Yep.
solving the next? Am I taking two steps forward each time? And if you do that, you really can be successful.
Yeah.
And I'm hopeful that we'll continue to see more of that. I agree with you, though. I think fintech's going. I think artificial intelligence is going to make that happen even faster. Right.
Oh yeah. Yep.
They're gonna be moving really, really quick on it. So let me ask you, if somebody is interested in working with Obie, if I hold rental properties, right? If I'm a landlord and I hold rental properties, how do I find you to use your services?
Yeah, so two ways. You can go to obieinsurance.com, Obie spelled OBIE insurance.com, or they can email me. I would love to quote it.
Your team doesn't want
Website,
that, though, Aaron.
right? Yeah, I know, and they're gonna listen to this, Kris, and it's great. And I'm hoping somebody's shaking their head right now.
Right. Right.
They can send it to me at Aaron@obieinsurance.com. I will do the responsible thing and pass it along to a really great sales agent. But it's Aaron, AARON, at obieinsurance.com. If you have any questions, happy to answer them. But I'll also help you along the line and get you a really good agent who can answer any questions that you have as well.
That's amazing. That's amazing. Really, thank you very much for joining us today, Aaron. Really appreciate it. I think it's really enlightening to hear that concept of kind of having been a founder, being empathetic to founders, and understanding what they've been through. And I think there's certainly opportunities for us to give back as we continue to build our companies as there. So I really appreciate it. Thank you very much for joining us today.
Thanks, Kris. This is great.
Excellent. Thank you very much to Aaron for joining us. If you like the content of today's episode, please like and subscribe on your platform of choice. And if you'd like to give us a comment or question about it, please follow us on LinkedIn and let's get engaged and chat there. Thank you very much for joining us. We'll see you next time.